Coming to adjustment of capital at the time of admission of a partner. Now students, there are two scenarios in this. Let us discuss case 1. Case 1 is when the capitals of old partners are to be adjusted in their profit sharing ratio. That is, once a new partner has been admitted into the business, obviously there will be some change in the profit sharing ratio. So under this case, old partners, they decide among themselves that their capital should also be in their profit sharing ratio. That means, let's say if the capitals of the old partners are 50,000 and 30,000 after all adjustments, but their profit sharing ratio is 1:1. So what they do is they decide among themselves that their capital should also be equal. Either A should reduce certain amount or B should bring in certain additional capital. Now there is a method of going about it. Let us discuss it using an example. Now students, the example that I am going to take is that A and B are partners in the ratio of 3:2. They admit C for 1/3 share and new ratio becomes 1:1:1. That is, all the partners decide to share equally in future. Now students, C brings 80,000 as his capital and the capitals of A and B after adjustment are rupees 90,000 and rupees 50,000. We are required to calculate new capitals and the cash which is to be brought in or to be withdrawn by the partners A and B. Now students, in this case, remember, capital after the adjustments is 90,000 and 50,000. That is for old partners A and B respectively. C is bringing in 80,000 for 1/3 share and the new ratio is given to be equal. Now let us proceed to solve it. C's share is given to be 1/3 of the total profits and C's capital is 80,000. Now students, we can clearly draw an inference that C is bringing 80,000 to purchase 1/3 share in the profits of the business. This implies total capital of the firm would be 80,000 into 3/1, that is 2,40,000. Now students, this is the total capital of the firm, and by total capital of the firm I mean the capital of A, B and C taken together. That means new partner is also included in here. Now we have got the total capital of the firm. Let us see what should be the capital of A and B. Proceeding ahead from total capital, which we had just calculated to be 2,40,000, we'll look at the new ratio. The new ratio is given in this question to be 1:1:1 for A, B and C. Now remember students, in this question it is directly given to you, but in some cases it is required or it might be required that you calculate new ratio yourself. So now A's new share is 1/3 according to this new ratio. So A's new capital should be 1/3 of total capital. That is 1/3 of 2 lakh 40,000. That makes it as 80,000. B's new capital is 1/3 of 2,40,000. Again, why 1/3? Because B's share is also 1/3, which makes it equal to 80,000. So now students, what we have got is their new capitals. Let us compare it with their old capitals and see how much amount is to be brought in by A or to be withdrawn by B or vice versa. So students, old capitals and new capitals. For A, B and C, C is obviously a new partner. So old capital of A after all the adjustments, remember this should be after all the adjustments, was given to be 90,000 and for B it was given to be 50,000. The new capitals that we have calculated are 80,000 and for B it is 80,000. That means A, who actually has a capital of 90,000, is required to maintain a balance of 80,000 only. So he will withdraw 10,000 drawn out of the business. And B, who has a capital of 50,000, is required to maintain a capital of 80,000. So he will bring in 30,000. This is his additional capital. He will bring in 30,000. Now students, let us see what would be the journal entries for bringing in these amounts by the old partners. Since A had an excess capital of 10,000, he will be withdrawing that capital. So the entry would be A's capital account debited to cash, and in case withdrawal is through bank, so you can write bank as well. The amount that was, which we had calculated as 10,000. Narration would be being capital withdrawn on adjustments. On adjustment, and you must mention it is adjustments of capital. Similarly, B was supposed to bring in 30,000. So the entry would be cash account or bank account debited to B's capital account, and the amount that he is supposed to bring in is equal to 30,000. That is being cash brought in by B on capital adjustments. So now students, this is the way it is to be done. But in some questions, remember, it is possible that it is given that adjustments should be made out of current accounts. So in case it is given that adjustments be made out of current account, what we'll do is we'll calculate in the same manner as we have done, but we'll simply replace this cash or bank account by current accounts of the partner. Let us take an example to understand that particular entry as well. The second case for adjustment of capital is proportionate capital. Now students, in this case, it is not that the capitals of the old partners are to be adjusted. In this case, the new partner decides to contribute capital on the basis of his share in the firm. That is, if the total capital of the firm is 3 lakh and the agreed share for the new partner is 1/3. So what he'll do is, he'll simply bring in 3 lakh into 1/3, that is rupees 1 lakh as capital. He is not bothered about the capitals of the other partner, but he'll bring in his capital according to his share in the firm. Let us take an example to understand this type of adjustment. P and Q are partners in the ratio of 5:3. They admit R into partnership for 1/5 share, and R brings certain amount of capital. This capital is not given to us. So now the question further moves on to say that R brings in capital equal to his proportionate share in the total capital of the firm. Additional information includes capitals of P and Q after adjustments are rupees 3 lakh and rupees 1 lakh respectively. So now students, R is a new partner. He has been admitted into the partnership for 1/5 share of the total profits. The capitals of P and Q, that is the old partners after adjustments. Remember students, whenever capital adjustment is done, it is always on the basis of capitals which have been calculated after adjustments. So after adjustments, capitals are 3 lakh and 1 lakh respectively. And R agrees to bring in capital equal to proportionate share in the total capital of the firm. So now, coming to the solution, students, R's share of profits is 1/5. Profits of P and Q, that is the combined share of P and Q after giving to R, is 1 minus 1/5, that is equal to 4/5. Students, understand this concept very clearly, that is, once we give 1/5 share of profits to R, that means the available share or the proportion to be shared by P and Q is only 4/5 of the total profits that we will be earning in future. So the combined profits or combined share of P and Q is 4/5. So we should mention it as profit share. Now for 4/5 share, they are contributing capitals of 3 lakh and 1 lakh. That means total capital of P and Q is equal to 3 lakh plus 1 lakh, which is equal to rupees 4 lakh. That means total capital of the firm is 4 lakh. Now on the basis of this total capital, remember, this is total capital of old firm. Old firm means P and Q. They were the old partners. So now students, for 4/5 share, they are contributing 4 lakh. Again, I'll repeat. For 4/5 share in the new firm, P and Q, who are old partners, have contributed a capital of 4 lakh. Now it becomes very simple. On this basis, we can calculate the total capital of the firm. So now the total capital of the firm would be equal to 4 lakh into 5/4. That means total capital comes to rupees 5 lakh. So now students, the total capital of the new firm is 5 lakh. R's share in profit is 1/5. This implies R's capital would be equal to 5 lakh into 1/5, that is rupees 1 lakh. So now students, it is very clear that R will bring in capital of rupees 1 lakh, and the journal entry for this can be cash or bank account debited to R's capital account 1 lakh. Remember, in case any information about premium is also given, so you'll have to add that premium to this particular journal entry.